You have several analysts coming out this past week and upgrading Williams-Sonoma, increasing their price targets. You have Blue Capital adjusting their price target to $290 from $220 while maintaining a hold rating. Now this is the monthly chart, and what sticks out to me is that I see two levels of interest on the monthly chart. This is down at, say, 147. We have another one at, say, 194. All right, so pull back to these levels is where the smart money, the institutions, are willing to load up. Scrolling down to the weekly chart, I see a beautiful weekly buyers level. Near that 222. And that does also coincide with what was all-time highs once upon a time in November of 2021. And so before we look at the daily chart, let's look at this article, again coming from investing.com. So shares of Williams-Sonoma received an upgrade from Morgan Stanley. Analysts from underweight to equal weight, citing the company's appreciated ability to hold its margin even in a weaker demand environment. They go on to say that Williams-Sonoma appears to be past peak pain on top line margins, and we have a better appreciation for the business ability to generate operating leverage against a tepid demand backdrop. Now, particularly, analysts predict a positive shift in the home furnishing sector, expecting stability and growth after the decline. They expect that category will see near flat to mid-single-digit growth rates this year and next year, contrasting with a 5.5 decrease last year. You also have Goldman Sachs coming out. They upgraded the stock from a sell to neutral. The banking giant's analyst said the consumer retailer has been able to sustain higher margins, and trends came in better than expected for both Q4 and guidance for this year. All right, so what I am going to do is just mark off this weekly zone. Call that weekly buyers at 221. Now kind of going down to the daily chart. You can see this gap higher. This was on earnings this past week. Now what you have here is at least a pause, but also a potential reversal. Typically when you see this type of pattern that consists of, say, 3 rejection wicks, the odds are price at least pulls back a little bit. Now you have this huge gap fill at $240, prices that are roughly $43 higher. The other thing to note is that price is way extended from the moving averages. So either price is going to base or pull back to the moving averages, or base, allowing the moving averages to catch up. But Williams-Sonoma is on fire. However, wait for the pullback. Don't chase price. Ideal buying level is at 221. The better level to go long is near this 195, which is the monthly zone. Thanks for watching. Subscribe. Please like the video.